Oh, good afternoon and happy 2026, everybody. Don't have my slide deck set up yet. I was so focused, Matt, on making sure we were live. How you doing, buddy? Happy 2026.
Yeah, it's going to be an interesting 2026 with everything going on, and I'm really looking forward to this year. I had a great holidays. How was your holidays, pal?
Oh, fantastic. I do need a break from my holiday, though, I will say. We had
Yeah.
family over every day for the first week that we were off, and then the second week we went up to the cottage where we had my parents join us. So the Saturday and Sunday before this week started were the first days we had without people, which is a blessing and amazing, and also exhausting once Monday hit.
Yeah, absolutely.
So it's it's good to be back, good to be getting into the routine. Kids are getting into the routine again at school. All that stuff's awesome. I got to say, we run the morning calls at our brokerage where we're meeting with agents every morning. And it's been so nice to start the day with like-minded individuals getting back on track. Because I got to say, I fully enjoyed my 2 weeks off. I was very disconnected. There were some emails going around for work stuff that, unless it was a client, I just was kind of ignoring. So it's nice to kind of get back into that rhythm. How are you feeling that way in terms of like back at work, first week, dusting off the cobwebs?
No, I mean, for me, it was kind of a little different. I was fielding a lot of phone calls to finish off the year. So definitely was talking with a lot of different types of buyers and sellers, which I'll get into a little bit later on what I'm kind of seeing. Or maybe we can jump into it now on
Yeah, I'd
who
love to
you're
hear it.
seeing start the year as buyer clients. I'm looking at investors who are looking to potentially get out of properties. I'm looking at people who want to buy land to build properties in the future on. I'm definitely getting the sense where I feel like we're going to need to be helping a lot more people that potentially might be struggling in certain situations this year. Um, but that's kind of what's been in my pipeline. What about yours?
Yeah, so a lot of our stuff is still, we're very database driven, a lot of relationship stuff. And our database, it varies in terms of who's in there, right? So there's a few people that are getting older and into those retirement years, and they're making those retirement plans, moving out of the city, moving out of the kind of the major urban areas and spreading out. And when we were talking with people through December, a lot of those conversations led to, hey, come sit with me in January. We got to start making a plan about what we're going to do next.
Mhm.
So that's what our January is really looking like right now, is just starting those introductory talks of where we're going next. There are a few people that are ready to take advantage of kind of that upsizing moment, as we've seen detached housing prices really come down a lot in the last year, again, depending on what area you're in. So that
Mhm.
gap has gotten close, and some people are looking at that, and it's a great thing. There's some other people, like you said, that are looking at that price decrease, and it's not helping them in any way. They're not in the stage where they're going to move up. It doesn't necessarily help them in that sense. So like you said, there's a lot more, I guess, hand holding, consulting to figure out what everybody needs and where we're at.
Yeah, yeah.
All right, brother. Well, let's jump into it today. I wanted to start our conversation with just what we've got here so far from the Toronto Real Estate Board. And just tell me real quick, Matt, did the slide update for you, or is my screen frozen? Do you see the
It
GTA?
looks like your screen's frozen. I don't see it on my end.
Okay. All right. Well, I'll have to figure that out in just a second. But first, I want to read to you guys here just what we came out with from the Toronto Real Estate Board. It's going to give you an overview of what kind of happened for 2025. So, the annual Greater Toronto area, the GTA, home sales declined in 2025 compared to 2024. As economic uncertainty weighed on consumer confidence over the same period, listing inventory remained elevated, allowing for selling prices to be negotiated downward, helping improve affordability. Matt, this is something that you and I have talked about a lot, is as we've seen these months of inventory start to stack, active listings start to stack, what it's done is given buyers a lot of choice. And when they have a lot of choice, they have a lot of negotiating power, right? And I think that's where we saw an increased amount of pressure downward on pricing in 2025, when originally, say December 2024, it was looking like we were going to see price recovery in 2025. And that's
Yeah.
not what ended up happening. All right. Now, when we move into for the calendar year, looking at the home sales, we reported 62,433 home sales through the Toronto system, which is down by 11.2%. Right. So now we've got this elevated inventory, but we're dropping 11.2%. overall sales volume for 2024. New listings up by 10.1%. Interesting number here, Matt. New listings amounted to 186,753 for the year. The average annual selling price in 2025 was 1,067,968, which was down 4.7% compared to the 2024 at the 1,120,000. So, Matt, when I see that decline there on average of 4.7%, I will say that that's not as bad as some of the year over year trends we were seeing on a monthly basis in a lot of places. Like even as we show some stats today, some of those numbers are like 15 to 20% down in terms of some of that pricing, definitely in terms of the sales volume compared to the 11.2%. But again, that goes to show why real estate is such a local market. And these TREB stats that you see in the news everywhere, they're great to kind of get a pulse on what's happening, but it's definitely not your story as a homeowner or as a home buyer.
Absolutely, and a big part of this is the condo market has somewhat to a large degree dragged down the market because you had a lot of investors buying these condos, and now they either need to get out of them or they're getting out of them even being before they're completed, right? So it, like you said, it all depends. This is why we break it down from condos, freeholds, and different communities, is to kind of show what each local community is actually doing, not just the whole picture.
There we go. And so it looks like I'm slowly starting to get this sorted out. Let me see if I can get back to full screen. A little behind the scenes action. Matt and I always talk the day before about what we're doing for our stats. We get everything ready. And then a half hour before we come online, we come on to do a tech check because technology is fun. It doesn't always work the way you want it to. So it looks like we're getting going here. Now, Matt, this is the next part. The last part that I want to end up with here in terms of what TREB is saying, right? Because everybody's got their own messaging. And a lot of the time, there's messaging out there that kind of serves whoever the messenger is best, right? It's not always as unbiased as you think, but we like to at least see where they're coming from. So TREB's saying that reaffirmed trade relationships and large-scale domestic economic development projects will be key for improved home sales moving forward. GTA households must be confident in their employment situation before committing to long-term monthly mortgage payments, even in this more affordable market. And that comes from Jason Mercer, who's been TREB's. He used to be just on their market data, but he's chief information officer now. I think this is something, Matt, that we've talked about at length throughout the year. This is only a part of it. Like, I don't think this is the full story for what we need to be looking at. Homeowners need to be looking at. But we sold fewer homes in 2024 at lower prices and lower interest rates. So what he's saying about affordability being better last year is true in comparison to 2024, and yet still people sat on the sidelines. So it's not about the next rate cut. That's not what's going to turn this thing around. It really does come back down to what's going on with the economy, what's going on with jobs. But I don't know if he's getting as deep as we really expect for when you and I do our prediction video. So when you see that, what rings true to you, and where does your head go?
Well, he says reaffirm trade relationships and large-scale domestic economic development. So he's talking about the agreements that we have with the United States. He's probably talking about Mark Carney going all over the world trying to spur more investment in the country. And then he's talking about economic development projects. But, is the money going into those now? Yes, but these are long-term, 10-year type projects. Some of them are almost going to be completed in the next couple of years. But if he's suggesting at the end here that, the relationship with the U.S. and the money that's going into the system right now is all of a sudden going to spur enough demand in the market, I personally don't see that. And I think in our prediction video, I'll explain why that is with some data that backs that up. But I 100% agree that what's stalling this market out is consumer confidence, and they are worried about their jobs. They're worried about their debt. They're worried about the United States of America and what's going on there. And there's also this wall of active listings that is in the way as well. And so when they see that much property, when they see that many properties on the market, there's a lot of choice for them to be selective, to buy their time. They don't have to rush into a deal that they might not want to rush into if they think that prices are still going to fall. So do I agree that there are some economic factors that are turning the right way? Absolutely. But the most important ones out there are consumer confidence and the amount of active listings that are piled up on the market right now.
Hmm. I like that he says, kind of fundamentally based on what we've known to be true in real estate for a long time, is that he comes in and says that with mortgage rates trending lower and affordability being better, the market is, set up and poised for recovery, right? And so looking at that aspect, that's true. There is opportunity out there for people to come back in,
Yep.
but but like you and I have said, in terms of what are some of the other challenges that we're facing, that wall of active listings is a big one. And
Yep.
especially in the condo market, right? That's where we get a lot of people trickling into our market that then buy up. Our condo guys that are already owning, they've got added equity because that market does well. Now they can buy the townhome. Then the townhome guys can buy the detached. So we've got to fix that condo market as well. That we need to see activity in there to help fuel upwards. Otherwise, it's just going to be people coming in that kind of skip that step almost,
Yeah,
right? So, and that's where
absolutely.
the bank of mom and dad has come in handy in the past with some of that transfer of wealth that we'll save for another conversation.
Yeah, I think this is a pivotal year for Canadian real estate, and I think it has a lot of potential to start moving the right way. Probably in the second half to late 2026, and for the people that are sitting on the sidelines right now, that's going to be a core time to really look and see, is now the time to finally jump back in, so that in 5 years I'm not sitting there thinking to myself, gee, I wish I would have bought into that market, because um, we are starting to get to that point where it's going to look very attractive. And when all the economic data starts to point in the right direction, that's going to be the time everyone else decides to jump in feet first. So getting in there potentially just a little bit before that, when things look okay, I think will be a good strategy for some people.
Yeah, I agree. I think a lot of the time people are too nervous about buying and then missing out on that little bit at the bottom that ends up happening. They wait too long till they see the recovery and then they're buying at an elevated price than if they had just bought
They're caught
originally.
up in the FOMO, and
Exactly.
these, as an investor myself, these are the times that you want to take advantage of well-priced properties in great areas, and they do exist now, and they will exist as the year goes on.
Hmm. And so, as we talk about 2025, I think it's important to note that we were poised for a recovery year. That was all the messaging we were seeing coming out of the end of 2024. 2024 had actually surpassed 2023 sales volume and price. We were starting to look a little bit better there. I'd have to double check pricing. Don't quote me on that as I speak freely. But we're at 70,000 sales according to 2024, looking like that was going to recover. Unfortunately, that was not the case through 2025 with all of that uncertainty that we were seeing around the world, particularly with our trade relations to the south of us. We come in at 62,000. And of course, that brought the decline in average price as well. So that's the tale of 2025. And what we want to do now is just look into like, okay, how are we poised going forward into 2026? So Matt, what you've done for us here is you've pulled out all the December data from December's past. So let's look back to 2010 with using all these different metrics of our sales volume, median price, new listing activity, and compare how we look December wise. So talk to me a little bit about that, starting off with our sales volume.
Yeah, so on the sales volume, you can see 2020 was the big peak. That's when we had close to 1,000 sales, whereas we're sitting under the 500 mark now. So really, was this the worst December that we've seen over the last 15 years? And we've had one worse one, which was 2020, and then 2018 was similarly a tough year. And you can see, okay, you never really get two bad years in a row, right? There's a flush out in the system, and then all of a sudden there's a reversal. Yes, the pandemic helped spike sales up to extremely high levels, and I'm not saying that's what I think is coming down the pipeline, but I think we can get back sooner than later, potentially in late 26, 27. We start getting back into the normal range of where we were. So definitely not the worst we've seen. 2022 was worse for that. If we go to new listings, again, we've seen more new listings hit the market back in 2017 and back in 2020 than we did for 2025. If we're looking at active listings, we had more active listings in 2017 and in 20. Looks like maybe just a little bit more now than 2018, but we did see years like that, and the world wasn't over, and the market did recover. When we're looking at sales to new listings ratio on the top right corner, we can see that, again, 2017, 2018 was either worse or similar. When we look at months of inventory, 2018, we're on par with that. But then it started to drop after that as, again, cycles adjust, stimulus is added. So I do think by the end of next year, we're going to see some better numbers than we did this year, that's for sure. The only one area is the average days on market is actually the highest it's been since 2010. So that is one interesting fact that we've seen make an all-time high. But when you look at everything in the market, you would have thought that maybe in some of these areas, this would have been one of the worst Decembers on record. But really, it only comes down to the median days on market. When looking at York, this is just York region,
Yep.
freehold, that these numbers don't appear as bad as what you might see.
Yeah, and I think it's important to note that where we're sitting in all of these charts is very similar to where we were sitting in 2017 and 2018, which was our last kind of big correction other than the COVID years, which were their own unique story. So it is kind of reassuring. Like, I'd like agents to sit back and just take note of that. Like, we've been through these markets before, right? There is a cyclical element to the real estate market, and it's not always sunshine, and it's not always the easy sale time or all that stuff. And there are going to be times where you have to sit down and truly help people more behind the scenes. It's not just about selling the house, because there is more that's going on. And when we look back, we made it through 2017 and 2018 unscathed as well. So it's just one of those things you got to buckle up, get down, and make sure that you're there to help people, right? So that you can kind of. I think the other thing that I want to take away is, for those of you that are tuning into this video, you want to make sure that you know the market so that you're able to give the best set of advice for people, right? You want to be able to be a consultant, sit there, break down and educate for your clients. And that's a big part of this. And because it's a more challenging market than it was going through the last 4 years, really. Like, we saw that big change. Let me come back to my chart here. Excuse me. The market changed again. We were about to go up in 2024, and we saw a 10%, 11% decline coming into 2025. There was another adjustment, right? So we're just rolling with it as we go through. So Matt, talk to me a little bit about what we're seeing in the freehold market here for York region.
Yeah, absolutely. So one of the standout things is we saw an uptick in the median price. It was up 2.3% month over month. Now, I think one of the biggest reasons for that was because we saw a decrease in new listings. We went from, in November, 1,525 new listings down to 648 new listings. So the amount of new listings coming on in December was decreased. So that might have had a little bit of a help in keeping prices a bit elevated, because when we look at year over year for freehold properties in York region, the prices were down 9.2%. And transaction volume was down 20% year over year. And then median days on market, again, we went from 25 to 36. So that's that really big uptick in how long, that properties were sitting on the market. Now, the termination volume was significantly less, which was a positive to see. It was down 38.7% month over month, but still up 15.8% year over year. So a little bit of a positive on the price point month over month, but still yearly was 9.2%, which is something to keep an eye on.
Yeah, and I think it's important to note as well, the good thing about this being York region is you do get a good sample size. So there was overall a boost there when we look at median price. You're seeing it as well in the average. But on that month over month side, it's not a clear indicator yet about which way we're going or if this is a trend that's going to continue. As we saw year over year, we're still looking down that 9.2%. All right, talk to me about new listings and how we're sitting there.
Yeah, so new listings, we've come right back to basically the average here. It's right in the pack. It's actually stronger than what we've seen for many of the other years when we get into December. So Uh, Definitely an uptick in the amount of listings than we prior see, but it's not a massive gap on how many we saw, which was a good thing. I was worried about seeing a big influx of people potentially coming into December for whatever reason to maybe try and front run the January market. They're worried that maybe there's going to be a big spike in new listings hitting the market to start this year. So they wanted to be they might have wanted to just be on the market during December, but that wasn't the case. But it was still higher than what we've seen in past years.
Yeah, exactly. Like again, if you're looking at these numbers on the right hand side, you can see 648 is a little bit higher than the majority of them, but still very much, I'd say, very much in the mix. We've got a couple outliers there hitting over 700. 2017, again, we talked about 2017 and 2018 being challenging times. 994 new listings hitting the market in December, and compared to our current state of 648. So again, this market isn't unheard of. It has happened before.
Yeah, and I think the reason I said that is because when you look at active listings, I had a feeling that the active listings was going to be the highest it's been since 2010, which it looks like it's the second most
Yep.
other than
17.
2017. So I knew that there was going to be more active listings on the market. So I was curious to see if new listings would uptick as well. They did, but not to a significantly worse degree than we've seen in the past. But active listings again sitting at the second highest it's been since 2010, which we have to assume that coming into January, February, and March, that this number is going to at least be on pace with old highs
Mhm.
or potentially making new highs. It's all going to come down to what type of absorption happens. Are we going to see buyers come back to the market early on, or are they going to be cautious? And if they're cautious, we're going to see those active listings make potentially new highs.
Now, I love that you brought it here by property type as well.
I didn't do this, so I don't know how this got in here, but it's in here. So we'll talk about it.
I love it. So I did take a look at this. It was likely Remel that put it in there for us. So I love that he's taking initiative. But
Yeah.
as we look at the breakdown and where we're seeing that new listings, or sorry, active listings sitting on the market, we see in comparison to December of 2024, where we had 1,400 active listings, we're now looking at 1,800 active listings there in terms of the detached market. So we saw an increase there about 400, where maybe only an increase of about 120 there on our townhouses, condos going up a little bit. It kind of stayed within the percentages of the market share that you would expect, but nonetheless, seeing that increase in comparison to where we were before, and definitely over what we saw even in our spring months as they tend to ramp up last year, we're still surpassing those numbers in terms of active listings. And like we showed on the last chart, it's really only 2018 that we're hovering under right now in terms of that active listing inventory. And like Megan commented earlier, I'm going to share this comment in a few minutes. It depends on what side you're looking at on what this means to you. If you're a buyer, what this means is choice. This is great to have this many options to look at. It's going to give you negotiating power. On the seller side, means you got to stand out. You got a lot of competition. But if you know that going into it, you can come prepared with a plan.
Absolutely.
Sales volume for the year. Maddie, talk to me about this kind of generally flat line we're looking at here.
Yeah, and this is what is reflecting in the market right now. Why do we have so many active listings? Well, nobody's absorbed the listings. This is one of the flattest. This is the flattest year
Yes.
that we've seen since the data that goes back to 2010. We did see the little bit of an uptick come end of April into May. It stayed quite steady all the way up until November, until we dropped off, which we typically do November, December. But we didn't get that big bump that we typically see between February and July that absorbs those active listings and takes them off the market, which also has the effect on which way price is going to go. If you just have nothing being absorbed, there's just too much supply out there, too many options, and that moves price. So it's a really important year that we don't follow the same type of path that we saw in 2025. Hopefully we can see these numbers. They're not going to be like anything we've seen in the past. We're just hoping that they're better than last year.
Yeah, exactly. And I think what's important to note as well is when we talk about the spring and the fall market, that's not a reality that we're seeing in terms of those boosts. So this is important for sellers, buyers, salespeople to know about. Is if you're banking on historical trends that you used to see, we're not in that time period anymore, right? Past results don't show future predictions or future behavior. And
Yeah.
what we're looking at here is at best, we hit maybe around that 750 back in May, when the bulk of all of our other years' data in the springtime is easily clearing that 1,000 units,
Yeah.
right? There's a handful of years here that didn't clear the 1,000 in terms of the spring. And we're about 3/4 of the way to those numbers. We're just not quite hitting it to even reach those lows. So
Yeah.
the sales volume, what this says to me, this is the market of where people are moving just because it's life. They don't
Yeah.
care about what's going on in the market. It's time for our family to make a move. And it's funny because it looks like a certain percentage of the population that you could almost bank on are just going to move because of life. Because look at how
Yeah.
steady that is on a month to month basis, completely ignoring seasonality for the most part.
Yeah. Yep. I think if 2026 follows the exact same like scenario as 2025, it's going to follow the exact same line.
Right.
Just for like what you said, those people need to move.
Yeah. When we take a look at our median sale price there, we see that dip that we happened. We talked about, December to December for freeholds in York Region was about a 9% decline. And that's kind of what you're seeing there. And so again, we're hovering above 2020 all year as we were watching. We're like, when does the dip happen below 2021? That happened for York Region freehold around June, July is where we see that crossover. We're coming a little closer than we would feel comfortable with on that 2020 line. Hopefully we can stay above that. And the reason why we're referencing that year over year action is because it depends now when people bought. Anybody that bought in 2021 and beyond, technically their home is not, on average, or looking at median prices, their home is not worth what they paid for it, right? So how far back do you have to have purchased your home to still have equity? Again, talking at medians and in general terms. So we're still hovering above that 5-year mark back at 2020.
And I drew that line up right
Yeah.
now just to kind of go back. It might be hard for some of the viewers to see the yellow line, but the yellow line is just slightly above the at the beginning of January. 2021 is when we had the big accelerant up to the upside,
Yeah.
and so we need to see these prices to start at least stabilizing or working their way up, because if not, you're going to drop below 2021 prices in a renewal year. 2026 is the renewal year for anyone that purchased in 2021 or refinanced. So you might have people, especially in the second half of 2026, that are more than 10%, possibly more than 20% off from where they purchased.
Yeah. All right, months of inventory. We have been trending upwards the last few years, and so we're sitting currently at 5.39 months worth of inventory. Taking that back, it's to that 2018, 2019 kind of numbers before we started to see that decline. And again, important to note that 2019, we already saw that recovery happening before COVID hit, right? It's looking back and being in the market, you felt that change coming. I remember having conversations like, okay, because we were living in a townhome at the time, now might be the time for us to get into that detached market because we're starting to feel those prices going back up, and we didn't want the spread to happen too quickly. And then COVID happened, and it ended up, again, months of inventory really dropped off. All of a sudden, we went from 1-hour showings to 15-minute showings. It was a crazy time in real estate. But again, that recovery had already started to happen in 2019. And that's kind of that window, that 2-year kind of recovery time from 2017 to 2019. Now, I don't think that this one's going to be as quick of a recovery. Clearly, we already know that from our 2022, the beginning of this, when rates started going up to where we are now. But nonetheless, that's how quickly, like once you're kind of at that peak, you're either maintaining there or that drop will start to come, as we talked about. Buyers having a little bit more confidence in what's going on with the economy and the jobs, they can come back into the market and purchase freely. All right, let's take a look at York condominium market. So when we're looking at our median price month over month, just a slight decline from November to December of 0.4%. That's 5.5% year over year. The condo market, in terms of percentages, did not go down as much as we saw in the freehold market for York Region. They kind of took their lumps a lot earlier on when all this started changing. And as we've talked about, Matt, the good thing about the outer regions within the condo market is there are more family-sized condos here than what you're seeing in the core of Toronto, where it's a lot of investor style, very small, almost student housing, student rental type condos, where they're being hit a little bit harder because there's been more changes in that market overall. Now, when we look at transaction volume month over month, we're down 30%, 25.3% year over year. Bigger hit in terms of what's actually selling on the market. New listings did decline nicely month over month, but we're up on a year over year basis. So 2025's December did have more listings hitting the market than what we saw in 2024. That was up 28.2%. Our median days on market also saw an increase, not quite as drastic as what we saw in the freehold market, but still increasing by 4 days, so up 12.9%. Interesting enough, down on a year over year basis. That's kind of funny, even with the influx. And maybe that's just it. Maybe it just worked out that there was an influx of new listings, bringing that new data point down for days on market to be down that 5%. I wouldn't say that that's reflective of an overall feel in the market by any means, right, Matt? And our termination volume actually down quite a bit in terms of the year over year, or sorry, month over month, which is surprising because that means that people weren't terminating or taking those condos off the market in the month of December. Either they got ahead of it in November, or they just said, hey, let's ride this thing out. And again, if you're an investor or it's a vacant property or it's tenanted, much more likely that you just leave that listing up as opposed to it being family owned and you're sitting there and being like, I don't want this thing on the market during the holidays. So yeah, interesting to see that. Still up, termination volume still up 14.9% on a year over year basis. Taking a look at our new listing volume, yeah, like just kind of like what we saw there. It is higher than what we've seen historically. When we looked at the freehold market, we were in the mix. We were maybe on the high side, but still very much closer to the middle. Now looking at new listings for the condo market, we are at a high of 323 new listings hitting the market. When we take a look at active listings, again, this is the condo market. We've been setting new highs in a lot of areas. This isn't just York. This number is, of course, exaggerated when we look at the city, but nonetheless, active listings sitting really high. You want to talk about who can take advantage? Like Megan was saying, depends on who you are. Are you a buyer or a seller? If you're a first-time home buyer looking to get into a condo, the amount of choice and downward pressure that you have there on pricing to scoop something up, to go get one of the family-sized condos, there's a lot of those options out there. Again, when you see active listings like this, as a buyer, look at all this choice. That's what this graph is. This graph is choice. And then we talk about median price. We saw a couple bigger dips around the summer months coming into the fall. September to October was a big dip that we saw there in median price for the condo market. And when we looked at December to December year over year, we were down that, 5%? Year over year, 5.5% in terms of that change. So,
yeah, if you, sorry.
No, go ahead, Matt.
If we're looking at price, if you were willing to buy a condo back in 2020, next year you're probably going to get very close to 2020 pricing now. Mm-hmm. And you can see the drawdown in the price that's already happened. And people shouldn't be worried that we're going to have some massive crash and prices are going to fall to down 50, 60% because there's just too much debt in the system for them to allow that to happen. They will print money till you wouldn't believe to paper over that. So, like you said, the condo market, if you pick the right place in the right location, is a fantastic opportunity for people looking to get into the market. Not sit there and say, I'll never be able to afford this market ever again. Like, look at the condo market. It's screaming at you right in the face that, hey, there are great opportunities here for you to finally enter the market at these prices.
Yeah, well said. Taking a look at our months of inventory, again, been climbing steadily upwards. We're now sitting at 7.56 months worth of inventory. You're not going to find a better buyer's market out there right now than the condo market.
This is where investors should buy. This is where
Yes.
you should invest. You don't invest when there's 1 month of inventory on the market. You invest when
Yes.
there's 7 months of inventory, because
Yeah.
um, that's how true investors, not speculators, but investors, make their money.
Yeah. And look at the amount of sales that we would have been seeing back in those 2020, 21, down at the 1 month worth of inventory, right? That's when the bulk of people decided to buy, right? This is where all the fear is. This is the best time to be taking advantage of that. You're getting pricing from 5 years ago at this point. And there's not many points in time where you can do that in the real estate market. All right, let's move into new market, talking about freehold housing. And so we saw an interesting change here, Matt. When we talk about median price, we saw this bump. I believe we see it in Aurora too. A nice little increase month over month of 6%. Now, important to note that there's some seasonality. And most importantly, Matt, look at that transaction volume. We're only talking about 36 homes for this data across all of Newmarket. And when we get to Aurora, same thing across all of Aurora. It's not a good enough sample size to say that that 6% is any type of trend. But nonetheless, that's what we saw in December when looking at median price. Of course, important to note when looking at a year over year standpoint, we're down 6.1%. And that's more realistic in terms of what we're seeing in the market than seeing this little bump here based on those numbers. Transaction volume being down 30% month over month, down 26.5% on a year over year basis. New listings, again, down drastically month over month. That's important to note because it's always seasonally kind of what you see. When you look over at the year over year, that's where we see, okay, there was still more listings than usual hitting the market. We're at 27.9, more than a quarter of the way up in comparison to what we were seeing last year. Huge jump in days on market. Again, interesting to see going from 21 to 25. Terminations being down 40%, but still up 66% on a year over year basis. This is a very interesting one to see, especially as we see transaction volume down and termination volume down as well, to see such an uptick in median days. Excuse me. Charts, guys, these ones are helpful. How are we stacking up compared to the last 15 years? We're a little bit on the high side, but we're following the same trend, which is an important part as we look at our new listings. When we talk now about our active listings, this is where you can see we come back to that 2018 and 2017 comparison. We're setting highs here in terms of active listings. Not as bad, as those 2 years, but still much higher than what we would expect to see. Again, these were correction years. These were market correction years, whereas these were more of what we were kind of standard seeing across those last 15 years. So we are higher than what we would like to see, again, in terms of active listings, depending on what point of view you are coming from. Sales volume, Matt, a little bit more up and down, but playing in the same band as what we saw for all of York Region, as opposed to just looking in Newmarket. A little more fluctuation on a monthly basis, and I think why you'll see that specifically in this graph, of course, is if you scale this up to looking at 500 units instead of looking as low as the 50 units, you'd see those fluctuations a little bit less. This is still playing in a band of 25 sales in terms of this up and down. So very flat in terms of our sales volume. And again, that was just the amount of people that needed to move in that time. As I think if you're going to make a generalization, that's where I would say.
Yeah. One other thing to throw in for the condos as well, now that I'm thinking of it, there's been a lot of talk on the government level that foreign buyers have been basically squeezed out of the market for Toronto until 2027, and there has been some talk that they want to change the rule around that, because they know that foreign buyers are the ones that would probably scoop up these condos, because they do need, if you're from China, maybe you want to move some money out of China. If you're from other parts of the world where you kind of want to get your money over to the Western Hemisphere, we had to put a ban on foreign buyers because it was having an effect to that degree. And 2027 is just around the corner. And I do wonder if there would be an effect of people potentially moving money that way.
Yeah, very good point. And again, that's what it's going to come back to. That's what we watch all year long is policy. Right? Policy can play a big impact on what's going on. And then, of course, the confidence that can come from those policy decisions.
Because at the end of the day, there's a lot of money, institutional money, in Canada from banks who have put loans against all these properties, who will force the government's hand at the end of the day if it's talking about a full-on collapse or needing to strengthen the condo market. They will choose strengthening the condo market because of how much of our monopoly big six banks, the money that they have in there. So this is a very real possibility that if the condo market starts the year off like we saw last year, that some rules might get changed, and we need to keep an eye on that, because if you are thinking about getting into the market, you have a client that's thinking about getting into that market, and that rule changes. That's a conversation that needs to be had with them to say, hey, listen, you've got competition coming. Do you want to get in now, or do you want to get into a bidding war with them later?
Yeah. Good point to bring up. Good point to bring up. Now, when we take a look at our median sale price, it's interesting. You could see in November where we talked about how we just dipped below that 2020, and we were wondering, is this going to continue, or are we going to see an upswing? And sure enough, with that 6% median price growth month over month, we bring back up over the 2020. So there's just the monthly fluctuation. I wonder, obviously we're still seeing more of a downward trend. Is this going to stabilize, or is this something that will cross over even further when looking back at 2020? Obviously, from December's range, when we start again here in January of 2026, we still have a lot of wiggle room, right? We're just under the 1 million mark. We're at 975,000 in terms of median price. If we're going to cross below 2020 at this point, we'd have to lose 75,000 in median price from the market. So I think there's no immediate risk of dropping back down to that 2020 pricing for freeholds in Newmarket, but nonetheless something to be mindful of as we saw that uptick there in the second half of 2020.
Sorry, I was rambling on about condos while we were looking at freeholds there. We got all confused when we went to Newmarket or Newmarket condo, and I thought we were still talking condos there for a minute.
Amazing. A good thought is a good thought, though. All right. Yeah. Now, taking a look at our months of inventory. Again, we've been trending upward. We're sitting just under 5 months worth of inventory in terms of the freehold homes here in Newmarket. Not the buyer's market that you're seeing there in the condos, right? Where we're over 7 months worth of inventory. We're under 5 here. We're trending more towards balance than we are buyers, ultimately, when you're taking a look at that. So again, sky's not falling, guys. We're really balanced is how you would look at this.
And it's very possible we chop around like we did 2018, 2019 from that chart where maybe we have peaked out here and maybe we just kind of chop around this top 5 months of inventory range.
Yeah. Very, very possible. And again, it depends on, like we said, it's very local. The whole market might not have that kind of recovery, but municipality-wise, neighborhood-wise, absolutely, you can see that kind of recovery, especially turnover at a quick pace. All right, we're going to talk now about Aurora freehold market. When we come into Aurora, same increase we saw, 6% boost. Now we're talking about a higher price point. We're now at $1,235,000 for our median price, which is up from the $1,165,000. Still down just under 5% year over year, 4.6% there. Our transaction volume for the month dropped 38.6%. And year over year, we're looking at 15.6%. Our new listings volume dropped off quite tremendously. Only 35 new listings hitting the market in December in comparison to 103. Same time last year, we were sitting at 33. So we're up just slightly in terms of new listings. That Aurora held much more of the trend of what we'd seen there in the past. Days on market, up a little bit, 25%. We're jumping from 28 to 35 days on market. And again, with the lack of new listings coming in to bring that average down, or that median down, I should say, makes total sense. Our termination volume down quite a bit at 44, but up just slightly compared to the same time last year of 8.6. So much more stable in comparison to some of the big swings we've seen in other places. When we take a look at our new listing volume, still higher than most, but much more in the middle. We're looking at 35. As you can see here on the side, not far off from a lot of the other Decembers when we're taking a look. So Aurora kind of maintaining a little bit more of the traditional sense there. But when we come into active listings, we are the second highest we've been at 151 active freehold listings, surpassing our 2018 of 136, but not quite reaching our 2017 numbers of 183. Taking a look at our sales volume, again, generally kind of just playing in this one little band that we're looking at. We're not seeing the big upticks in the spring that we saw. Again, maxing out in April, May, just around that 50 units, dropping off again in the summer. This, I will say, held a little bit of a seasonality to it. We saw that uptick maxing out in October, which is pretty traditional in that sense. There's a couple of years where it was a little bit later into November at 44. So I would probably say that was 2016 where we were seeing that. It's hard to tell with the colors, but 2016, you got to remember, we were really ramping up into the start of 2017 before the correction happened. So not uncommon to see some of these late pushes into November there, but for the most part, holding a similar trend there. The only difference is our median price in Aurora after the summer really dropped off, right? There was fluctuations on a month-to-month basis, but when we're talking about a real trend here, it really swooped off for the fall market. So when we see sales go up, usually in those spring and fall markets, we start to see median price go as well. Was not the case in Aurora. This was people picking up deals from homes that had been on the market for quite a while. And so there's the balancing act of where buyers are seeing value and sellers that need to sell the properties. Months of inventory, we've been trending upwards, but down a little bit from our highs that we saw earlier this year. More so in a buyer's market than what we saw in new market. New market was under 5 months worth of inventory. We are now over 5.5 months worth of inventory here in Aurora. So trending a little bit more towards that buyer side. Matt, talk to me about Georgina.
Yeah, so Georgina, a little bit of a difference on the month over month. We were actually down 1.4%. Now, again, transaction volume was down 40%. We only had 28 transactions instead of 46. So again, that can really, manipulate what the median price is. So if we just look at it from year over year stance, we were down 9.3% in the median price, and transactions were down exactly the same as the month over month on the year over year. We went from 46 to 28, so just under 40%. New listings down 39.2, a little bit less than some of the other areas that we've looked at. But new listings year over year, 9.3% increase, so not a significant one, going from 54 to 59 new listings. And then the median days on market, we went from 29 days to 33 days, month over month, and year over year, 28 days to 33 days. And then termination volume, again, just like we've kind of seen across the board, terminations went from 64 in November down to 36 in December, and year over year, very small change of 7.7%, going from 39 to 36. So just a little bit different on the price wise than what we've seen in some of the other areas, but not a significant downturn.
Yeah. And interesting to see that termination volume actually down on a year over year basis. That's interesting to see.
We haven't seen that in other spots.
Yeah. And like you said, this part, our month over month being a little bit different, where we saw some gains in Newmarket and Aurora. We saw a decline there in Georgina, but also a bigger hit in terms of the year over year numbers, interesting enough, down at that 9.3%.
Yeah. Then looking at new listings volume, we are on the higher side of the spread to finish off the year. It was pretty tight to the pack. At the beginning of the year, it was really interesting because we didn't see a big bump of new listings to start the year. It was really subdued, and it was very interesting to see. We were actually heading downwards, and it looked like Georgina was going to be an outlier, and it was going to be quite strong just because of how slow it really got off to. But it did start to pick up as the year went on. We definitely have seen some months with years that had a lot more on the new inventory side, but it was just on the upper range of the bound. It wasn't chaotic and getting ahead of itself. So it was a pretty tight new listings volume for the year of 2025. Going into active listings, although that was the case, we weren't having those new listings being absorbed from the market because, as we'll get into the sales volume after, it followed pretty much the same as everyone else did. So we did get that big outsized gap, at least in the summertime, for new listings, and then finished off the year, I believe, at the highest it's been since 2011 with 191 as compared to 177 last year.
Yep.
And then going into the sales volume again, we did get that. We were really stagnant up until April. We got a nice little bump up come May, and then it was just kind of really steady to the downside to get into the later months, October, November, and then drop down. Now we did have a worse year in in Georgina back in what year is that?
2023, it looks like.
Yes, 2023 with 24.
Yep.
So 2023 on the second half definitely had a much worse year than what we've seen in 2025. So, a small victory there, I guess. And then getting into the median sale price, it was pretty steady throughout the year. We've seen the drop off at the end of the year, but for the most part in the year, it was a steady price. So I would expect that to start the year. We should start to come up a little bit and follow that trend line. Um, but
It's
at least,
interesting to see it just skirting up and down over that
yeah,
800,000 mark, right?
skirting up, like, so you've kind of really found a bottom where buyers are willing to step in for that price point.
Yeah.
Because when we look at a lot of different areas, the gap for 2022 to now prices is not as defined as it is with this one. It's a very straight across. The beginning of the year, yes, there's a bit more of a gap, but as you go throughout the year, I think that Georgina has kind of found the floor in which people are willing to step in at those prices, and maybe even sellers are willing to wait for those prices because it's held quite steadily for the year. And then looking at months of inventory, we have had two other times in history with larger months of inventory, 2017 and also looks like the end of 2024 there.
Yep.
So we are working our way up, even though we are in December. That months of inventory is starting to push its way higher. So we will see if we're going to make all-time highs. Well, not all-time highs, but highs since 2010. Or if we're going to start to peak out here. So definitely keeping an eye on how January, February turn out, because we are sitting at 7.35 months of inventory. That's a lot of inventory to be sitting on the market.
Yeah, and I think what's interesting to note, like what you brought up with, it feels like they're kind of finding a place where the market is happy around that 800,000. And when you see this months of inventory, it's like, okay, it doesn't seem like the market wants to go any lower than this right now in
Yep.
terms of the value across
There's
freeholds
definitely not a panic in the feeling is there's not a panic, at least in the freehold market. In
yeah.
that is all there is in Georgina, but doesn't seem like there's too much of a panic in that market to dump prices. And it's really interesting to just see how much of a band it's been with the last couple of years as well. There's not this, like, at the end of the year, yes, there's a big deviation there because you've got 2021 and 2022 in there.
Yeah.
But definitely during those summer months, it's a very tight market where the price is. It's typically the beginning of the year, end of the year, you're going to see some price differentials from years past.
Yeah, and it's interesting because I would say that 2023 really is our next big high compared to 2021. And this goes to talk about just how we've seen that fluctuation. So 2023, we were back up to 904,000 above our 2022 prices at the 809 and just under our 2021s before the correction. So it's interesting to see how that recovery really happened there in 2023. And then we started to see the difference coming into 2024. And of course, 2025 pulling those lowers because we get 904, 837, 760, right? But again, looking at last year, it's hovering right around that 800,000 mark pretty steadily. All right. Talk to me about what we're seeing here in Simcoe.
Yeah, so Simcoe's, for the most part, has a lot of similarities with Georgina. When it's an outlying town. Well, Simcoe's more than just a town, but it's a little further north of York region. It's at the exact same 1.7% decrease in price, with a lot more transactions to kind of solidify that downwards trend in the price, going from 437 transactions in November to 338 transactions in December. So they were down 28.5%. But what we're looking at year over year matches kind of like the new market, some of the other areas where we were down 9.8% on the median price. as well as down 8.9% in the amount of transactions. New listings higher up there, like we've seen some of the York Region places at 52.2%, which is the seasonality adjustment. Not a lot of people putting their houses on December. So we went from 1,151 to 550. But year over year, just a small increase. In December, just 2.6%, which is it's a good thing to see because we've definitely seen other areas where more new listings are piling up on the market. Median days on market, we went from 37 in November to 40 in December, but year over year, we went from 35 to 40. So definitely a bigger jump up year over year with the extra 5 days on the market. And then as far as terminations go, I think it's better to look at the year over year. We had 420 this year. We did have an uptick to 466. We were up 11% on the termination. So clearly still a little bit more price adjustment needs to happen. And then looking at the condo market, down 3% month over month, but only down 3.6% year over year instead of the 9.8% that we saw in the detached market. So a little bit tighter on the downwards pressure on the price. Now that might have to do with the fact that we only had 45 sales last month, but we did have 50 last year, so there was only a 5 condo difference. So it's nice to see that the price was only down 3.6 year over year in the December market. Again, new listings down 46.6% month over month to be expected, but only up 5.1% year over year. And then median days on market last year for December, we were looking at 43. This year, 55. So a decent sized uptick, 28% on the median days on market. And then again, termination volume. Last year we had 62. This year, 83, so a 33.9% increase in the termination volume.
Yeah, and I think it's important, specifically for this month of December that we're reflecting on here. It just makes so much more sense to look at those year-over-year numbers because we know month over month is a big seasonal change when you go from November to December, right? So I think that narrowing in on that year-over-year just makes a lot of sense as you're evaluating those numbers.
Mm-hmm. Yep.
All right, everybody. Thank you so much for tuning in and joining with us. Before we go, I want to highlight something here from Megan, if I can figure out how to do this. Usually I'm pretty good at that stuff, but maybe not today. There we go. So Megan saying the comment was the market will go the right way. It depends on if you are a buyer or a seller. I'd like this to be a big takeaway for a lot of people that are watching the market, listening to the news, and curious about what's going on. All of this information, it's different to every person. It impacts them differently. There's market areas that we didn't cover. Your neighborhood isn't included in this data, right? Real estate is so neighborhood driven. It's so local market driven. And it depends what side of the coin you on. Are you a buyer, a seller, investor? Maybe I should have used a dice instead of a coin for that analogy. But the whole point is, the important part with this data is you got to look at it and say, what does this mean to me? How can I use this information to better suit myself and in my decision making? So Megan, thank you so much for adding that to our conversation today. Matt, talk to me a little bit about some of the other stuff we have planned coming up for our market breakdowns this month, because I know there's more that you and I have scheduled to film. So share a little bit about that with everybody today.
Yeah, absolutely. We thought that we would kind of split things up. We would just do a video for the market stats, and then we would also do a video for more of the economic side. And we're also going to do a video on our predictions market for kind of what we think is going to happen for 2026. Dylan's opinion on it, my opinion on it. You know, predictions are just predictions. Doesn't mean that they're going to play out. We're probably going to be wrong on a lot of issues, but it's fun just to kind of throw it out there and see where things may or may not go. So we've got those coming in the pipeline, hopefully later this week as well.
Exactly. So feel free to subscribe to our YouTube channel where we'll be sharing all of those videos. Don't hesitate to join the conversation. If there's a neighborhood or an area or a municipality that you want to see featured in these videos, don't hesitate to leave a comment and reach out to us. We will include it next time just for you. Maybe as a one-off, but we will do it. If you chime in, we're happy to share more of that information for your local areas. So please chime in. And until next time, thank you so much for joining us. We look forward to seeing you then. Bye for now.
Bye, guys.